Welcome everybody to the latest investment update. I'm joined here by Dan, one of our global analysts here at Generate as well. So we're going to be talking sort of around the mid-year results and sort of around our global funds as well. So how's everything been going?
Well, as you know, Mark, it's been quite a bumpy ride so far this year. We've seen quite a lot of volatility in the market. It all kind of kicked off late January with DeepSeek coming into the AI market and making investors question the US's role in future AI development. Then, of course, we had the Liberation Day tariffs in early April that threatened to disrupt global trade, but have since been walked back. And then even as late as last month, we had the US and Israel escalating a potential conflict against Iran, which had the potential to create a lot more geopolitical unrest there as well. So there's been a lot of unprecedented events so far this year, but fortunately, markets have recovered from each one of those. And the key indices are now trading back at all-time highs. So for instance, the S&P 500 is now up 6% year to date, and the global index is up 8% year to date.
With so much volatility, right, how are markets still going up?
It's a bit of a misconception that people believe that markets reflect current conditions as they are at the moment, or reflect the world as it is. What actually happens is that the market tries to anticipate what's going to happen next. So it's always future focused. It's always looking forward. So tariffs are a great example of this. Some members might be asking, what happened to tariffs? Aren't they still an issue for a lot of these companies? And to an extent, that's true. Tariffs are higher than they were 6 months ago, and there's still a lot of negotiations going on. But the markets have already taken that into account. All that news has kind of been digested as it stands. And companies have largely been telling us, look, the effect of the tariffs are going to be lower than they initially expected. They'll be able to work around a lot of it. They'll be able to move production to areas with lower tariffs, and where that's not possible, they'll charge a minor price increase onto customers. And so the companies are telling us that they're still in relatively good shape. So what that means is that the market has now kind of absorbed that information, and they're now, I suppose the market is thinking that these issues are now largely behind us, and that the companies that are telling us this are now well positioned to keep growing into the future. Whether or not that turns out to be true or not remains to be seen. But we in the investment team, we're still expecting volatility to be present, but we're really encouraged to hear that looking into the future, a lot of these companies will still be okay despite what's going on.
So just on that, sort of what is the thought process with the investment team with all the volatility going on?
As long-term investors, we have the luxury of using volatility to our advantage. When we value and assess the potential for companies, we look out multiple years on our horizon. And so what often happens under volatility is that you get the situation where the value of a company seems to be quite steady or seems to be rising, but the price offered to us by the market drops steeply. And you can kind of get this imbalance where the value is really quite attractive, but the price is also really low. So we use those volatile conditions to buy into really spectacular companies, those kind of companies that are high quality, have strong growth prospects, but are now trading at a really attractive price. And that enables us to kind of take advantage of those market sell-offs to load up on those kind of companies. That tends to be our approach under volatility, and we'll continue to do that in the future.
So over the last 6 months, what sort of worked best with the investment team? Can you sort of highlight some key aspects in that area?
Yeah, great. So the main success stories have been the companies where we've invested in on that downward trend under the volatile conditions that I was just kind of talking about before. So these company names didn't do quite well earlier on in the year because there was a lot of pessimism around their future prospects. But things have since improved, and they've recovered a lot of those gains, and we've kind of invested low and are now kind of trading high again. A good example of that is NVIDIA. So NVIDIA was facing some extreme pessimism, particularly after DeepSeek, where investors thought that potentially GPUs wouldn't be as needed anymore after those software innovations that came out from DeepSeek. And they were trading back at about $100 a share when we started getting interested in them again. And we bought into the company, and they're now trading at about $150, $160. So that's given us a good return on investment there. And another good example is Meta. They were facing similar pessimism after the Liberation Day tariffs were announced. But we picked them up at about $500 a share, and now they're trading north of $700 a share. So again, a good turnaround there for the investment team. And those are just two good examples of where we've used volatility to buy into highly attractive companies at low prices.
Nice. And I guess talking to around our members, what's some sort of lessons they could potentially take away, just sort of looking back over the last 6 months?
Yeah, it's interesting, Mark, because whenever we face volatile market conditions as a company, we get a lot of members calling in and saying, hey, should I change the conservative fund or should I stay the course? We often give the advice, stay the course because volatility is short-term and we're long-term investors. And therefore, just stick with it. And it's interesting because that's a similar approach to what we use in the investment team. So we also get bombarded with, loads of headlines and research telling us how bad things could get, and it's time to cash out and turn more defensive. But it's a real credit to the experience of the team, and in particular the portfolio managers who can look through the noise and maintain a long-term investment focus, to use those moments to actually buy into those really attractive companies at low prices. And that's worked out really well for us. And so the message, I suppose, is when we tell members, stay the course, volatility tends to be short-term. It's not just a tagline that we use, it's actually an approach that we use in the investment team ourselves.
Right, great. Well, thanks for the update, Dan. If you do have any further questions, especially around staying the course, please reach out to your financial advisor. Thank you.